Hello students, welcome to this another discussion video on the topic Loans Receivable. At the end of this lesson, you should be able to measure loans receivable initially and subsequently and recognize impairment loss on loan receivable. So what is this loans receivable? So it is a financial asset arising from a loan granted by a bank or other financial institution to a borrower or a client. So, yun na nagpapautang, and the nature of the business of the entity is really lending money. So, itong loans receivable na to ay normal or the usual receivable or trade receivable of this particular entity such as bank and other financial institutions. So, paano ba natin i-measure ang loans receivable? So, dalawa rin yan, no? Initial tsaka subsequent. So, initially, loans receivable shall be measured at fair value plus transaction cost. So, pag sinabi natin fair value, that is just equivalent to the transaction price, which is actually the amount of loan granted to borrowers. Whereas, pag sinabi natin transaction cost, ito yung mga costs or expenses incurred that are directly attributable to the granting of the loan. So, ang tawag natin dyan ay mga direct origination cost. So, take note that if this particular transaction cost is directly attributable to a certain loan, then it must be included in the initial measurement. So, in short, idadagdag natin itong direct origination cost sa initial measurement ng ating loans receivable. Now, pag meron namang indirect origination cost, so hindi mo siya trace directly sa isang loan, to a particular loan, then such indirect origination cost will be expensed outright. So, hindi na siya kasama doon sa initial measurement ng loans receivable kasi nga indirect na siya. No? So, you cannot directly attribute it to a certain loan. Subsequent measurement naman is amortized cost using effective interest method. So, this is just the same with your notes receivable. Now, we're in amortized cost is just equivalent to the initial measurement minus your principal repayment plus or minus the cumulative amortization of any differences between the initial carrying amount and the principal maturity amount and minus the impairment or uncollectibility of accounts. Yung mga accounts na doubtful of collection na or possible na hindi mo siya ma-kolekta. Next, we have this origination fees. So, ano ba itong origination fees? So, these are fees charged by the bank against the borrower for the creation of loans that include the compensation for the following activities. So, first, evaluating the borrower's financial condition. Second, evaluating guarantees, collateral, and other security. C, negotiating the terms of the loan. D, preparing and processing the documents related to the loan. And E, closing and approving the loan transaction. So, in short, kung familiar kayo kapag nag-avail tayo ng loan to a certain financial institution, meron silang i-charge sa atin yung service fee. So, yung service fee na yon na i-deduct ng financial institutions from the proceeds of our loan, ang tawag natin dyan ay mga origination fees. So, it's the fees collected by the bank or the financial institution from the borrower. Parang compensation of those costs incurred by the bank or the financial institution in processing the loan of the borrower. So, how do we account for origination fees? So, yung mga service charges, no, or tawag natin dito origination fees, received by the bank or the financial institution from the borrower, they are considered as unearned interest income. So, when you receive service fees, no, ang tawag natin again ay origination fees, then they shall be recognized as unearned interest income. And such unearned interest income will be amortized over the term of the loan. So, in short, pag meron service charge, no, na dineduct yung financial institution or bank from the proceeds of the loan of the borrower, so in effect, para siyang nagkaroon ng dagdag na income. No? So, that's why we consider it muna as unearned interest income, and then later, we will amortize it, no, over the term of the loan and recognize it as an additional interest income. Now, if not chargeable against the borrower, so if na yung mga costs or mga fees which are not charged to the borrower, ang tawag natin dyan ay mga direct origination cost. So, yung mga directly attributable cost na na-incur natin in relation to that loan, pero hindi natin na-charge sa borrower. So, ang tawag natin doon ay mga direct origination cost. So, this direct origination cost will also be deferred and it will be amortized over the term of the loan. So, pareho sila doon or pareho sila ng origination fees, no, na i-amortize mo during the term of the loan. Pero magkaiba ang kanilang effect. No? Kasi yung effect ng origination fees ay parang merong dagdag na income, no, on the part of the bank or the financial institution. Pero yung direct origination cost, actually that is expense, no, or a reduction to the interest income of the financial institution or the bank. Kasi yung direct origination cost class ay gastos, no? Whereas yung origination fees, na-collecta natin galing sa customers or borrower. Accounting again for origination fees. So, preferably, the direct origination costs are offset against unearned origination fees received na from borrower or clients. Now, when the origination fees is greater than the direct origination cost, then the difference is charged to unearned interest income. And that unearned interest income will be amortized. So, as mentioned kanina, ang effect nitong unearned interest income na to, when they are amortized, is that mag-i-increase ang ating interest income. So, kasi nga, di ba, ang origination fees ay parang service charges natin or service charge natin for processing the loan na to the borrower. So, we charge them to the borrower or to the clients availing the loan. So, parang nag-advance or parang nag-charge tayo ng additional fees sa kanila. And in our end, that's actually income, no, which can increase the interest that we can get from the clients or the borrower. Tapos, kung baliktad naman, no, if the origination fees is less than the direct origination cost or the direct, origination cost, then the difference is charged sa direct origination cost. So, ito mas malaki yung parang expense natin kumpara sa nakolekta natin galing sa client. So, itong direct origination cost na to, again, that's a deferred amount. and it will decrease the interest income when they are amortized. Kasi 'di ba, yung direct origination cost natin ay atin ding i-amortized over the term of the loan. So since parang ang nangyari ay mas malaki yung nagastos natin kumpara sa nakolekta natin from the client or from the borrower, so in effect, parang nabawasan yung interest income natin. So every time you amortize the direct origination cost, then it has the effect of decreasing your interest income. So to illustrate the concepts na discuss, so let us have this problem. So we have Winter Bank granted a loan to a borrower on January 1, 2020. So the interest on the loan is 12% payable annually starting December 31, 2020. So the loan matures in 3 years on December 31, 2022. So these are the information. So you have your principal of 5 million, your origination fees received from borrower, that's 331,800. Your direct origination cost incurred, so yung mga nagastos natin, so you have 100,000. So to solve this problem, what you have to do is compute first the initial measurement or the initial carrying amount of your loan. So, paano ba natin i-compute yun? So, of course, start tayo with the principal amount which is 5 million. So, take note that origination fees or collection natin from the borrower. So, therefore, i-deduct natin siya sa ating principal amount. Kasi nga, 'di ba, yung principal amount, yun yung grinant mo sa client mo or sa borrower mo. So, pag meron ka na kolekta from them, of which itong origination fees or collection coming from the borrower, then we have to deduct it from our principal amount. Whereas, direct origination costs are added to our initial measurement or to our principal kasi nga, ito gastos din natin or gastos ng company. So, in short, 5 million here is a cash out from the bank or the financial institution as well as direct origination cost. So, yun mga cash out yan, nagpalabas tayo ng pera. 5 million tsaka 100,000 for the direct origination cost or transaction cost. Whereas, itong 331,800, collection natin yan or meron tayong natanggap na pera galing sa borrower. So, therefore, we have to deduct that amount, 331,800. So, the initial carry amount of your loan is 4,768,200. So, that is your initial measurement. So, to record the transaction, so we have here, first is the release of the 5 million amount. So, you have a debit to loan receivable, 5 million, credit to cash for 5 million. So, that's for the principal. Another is to record the collection or the receipt of the origination fees from the client or the borrower. So, we debit cash at 331,800 and then we credit unearned interest income at 331,800. Another entry is for the direct origination cost. So, since we already seen that or we have already seen that the origination fees is greater than the direct origination cost, and therefore we have to recognize unearned interest income. And that is why when we record our direct origination cost, we did not anymore debit direct origination cost account. Instead, we debited it already to your unearned interest income. That is to offset your direct origination cost no, from your origination fees. So here you'll have a debit to unearned interest income of 100,000 and a credit to cash of 100,000. So kung titingnan natin, yung net amount ng unearned interest income ay 331,800 minus 100,000. So you have a total of 231,800 unearned interest income. So say for example, you'll be asked, magkano ang initial carrying amount or initial measurement of this loan? So for presentation wise, no, so you'll have your principal amounting to 5 million. And then we also have our unearned interest income. So we simply deduct unearned interest income. So which is, as we have computed, that is 331,800 minus your 100,000. So that's 231,800. So if you're going to deduct that amount from 5 million, so you will have, this is your carrying amount as of January 1, 2020. So that's the same amount at dito sa taas. Ayan, 4,768,200. So that's the other way of presenting it. Na yung principal mo or yung face amount mo, deduct it, no, with your unearned interest income. So that was the initial measurement, no, which is 4,768,200. So let's proceed to subsequent measurement. Now, pagdating ng December 31, 2020, magkano na ang ating i-present, no, or how much value should we assign to our loans receivable? So sabi doon, gamitan natin ng amortized cost, or i-measure natin at amortized cost using effective interest method. So we have here an amortization table using effective interest method. So you have, first you have your carrying amount of 4,768,200. Then we just plot here all the interest that we received. So take note that interest received here is based on the nominal interest rate. So based on the problem, the nominal interest rate is 12%. Kasi yung nominal interest rate, yun yung interest na naka-mention or na-mention dito sa agreement ng bank or financial institution and the client or the borrower. So this column here is computed as your principal times your nominal rate. So that is 5 million times your 12% nominal interest rate. So that's why it will give us 600,000. Now, in this column, interest income naman, this is computed as your initial carrying amount times your effective interest rate. So, paano ba natin i-compute yung effective interest rate? Basically, class, no, because the initial measurement is not equal to the principal maturity amount, no, diba? Yung principal amount natin ay 5 million, pero yung initial carrying amount natin ay 4,768,200. So, hindi sila equal. So, pag hindi sila equal, ibig sabihin nun, hindi rin equal ang nominal interest rate sa effective interest rate. Yung minention na 12% interest rate, that is just a nominal interest rate and that is not the true interest rate na applicable for this loan because of the difference between the principal amount and the initial measurement. So therefore, dito, dapat mag-compute tayo ng effective interest rate. So pag sinabi natin effective interest rate, yun yung true, no? Yun yung totoong effective interest or yun yung totoong interest na ma-earn ng financial institution with this particular loan. So, how do we compute effective interest rate? So, in this problem, actually, binigay na siya. No? Sabi niya, the effective interest rate is 14%. But, you can actually compute for that, no? For that effective interest rate. Say, ang gagawin mo lang ay hanapin mo or you'll find a rate na kapag diniscount mo yung cash flows related to this loan, ang makukuha mong amount ay ito, no, equal or most likely malapit sa ganitong amount, 4,768,200. Say for example, kasi binigay na niya, no, yung effective interest rate daw ay 14%. Although that is just an estimate. Pero paano ba yan kinompute na? So, ang ginawa, meron tayong tinatawag na interpolation method. So, we have to account for those cash na ine-expect nating makuha, no, galing sa loans na to. Say, ano bang mga expected cash flows natin from this particular loans? Of course, we would expect interest. So, yung interest natin, sabi nga, di ba, every year makakatanggap siya ng 12% interest. So, that is equivalent to 600,000. So, yung 600,000 mo, that is to be received on an annual basis. So, every year, makaka-receive siya ng 600,000. Another is yung principal, which will be received lump sum, no? So, after 3 years na. So, what we're going to do here is you simply compute for the present value of this two cash flows here using a certain rate. So, ano kaya yung interest rate na yon? So, looking at the figure here, so that interest rate most probably must be greater than 12%. Kasi, kung titingnan natin, ang marireceive ni bank or the financial institution at the end of the term of this loan is 5 million. Yet, ang na-cash out niya lang ay 4,768,200. So, parang in a way, meron siyang additional interest income, no, as compared to mentioned na 600,000 lang. So, ibig sabihin, since yung origination fees natin ay mas malaki compared sa direct origination cost, ibig sabihin nun, meron pa tayong dagdag na interest income na aside from the nominal rate mentioned, which is 12%. If that's the case, then ibig sabihin, we must find a rate which is greater than 12%. So, trinay niya ang 14%. So, compute tayo ng factor. No? Pag ito, installment man ito, so the factor will be 1 minus 1 plus I raised to the power of negative n divided by I. So, kung compute natin yung factor na yan, so this is the factor for present value of ordinary annuity of 1. So, multiply lang natin yung 600,000 by the factor. So, yun yung amount. And then, for the principal, which will be collected 3 years after, so the applicable present value factor will be present value of 1. So, you'll have 1 plus I raised to the power of negative n. In this case, that's 3. So, multiply lang natin yung 5 million by the factor. So, kung i-add natin itong dalawa, hindi talaga siya exacto, no? Because of the rounding of the factors. there is a difference na slight difference of that much, 363.20. Pero ideally, dapat ang ma-derive mo dito na present value of the cash flows ng loan must be equal to the initial carrying amount. Para masabi natin ay yung ginamit mo na interest dito, which is 14%, yan talaga yung effective or yung totoong interest rate applicable for this loan. Now, ano bang significance nung effective interest na yan, no? So, that effective interest class, yan yung gagamitin natin pag-compute ng ating interest income. Say, for example, here, so since you have computed that it was 14%, now the effective interest rate is 14%. So, what we're going to do is that etong 14% na yan, i-multiply mo sa carrying amount. So, that will be carrying amount sa previous na year, multiply natin by the effective interest rate. So, etong 667,548 na to, this is actually computed as 4 million, ito, 4,768,200. Multiply that by 14%. So, you'll have that much. 667,548. So, after that, you just get the difference, no, nitong dalawa. This is your effective interest or is your interest income, and this is your interest received, so which is equivalent to your nominal interest. So, kung i-deduct mo to or kunin mo yung difference ng dalawang to, you have 67,548. So, that 67,548 is considered as your amortization. So, that amount, that amortized or that amortization, you're going to add it to the carrying amount of your loan. Why add? Because gusto natin that after 3 years, yung balanse ng amount ng loans receivable ay mag-equal na siya doon sa face value. So, dito, this should have been that much plus this much. So, you'll have 5 million. Okay? So, again, balikan lang natin paano ba kinompute itong amortization table na to. So, we'll start with your carrying amount noong January 1, 2020. So, this amount is multiplied by the effective interest rate. As mentioned, it was 14%. So, naka-arrive siya ng ganitong amount, 667,548. So, this amount here, dineduct lang natin from the interest that you receive. So, ito yung amortization. So, amortization, i-add natin doon sa carrying amount. No? So that, for the next year, ito yung base amount, no? 4,835,748. So, that 4,835,748, i-multiply ulit natin by the effective interest rate, which is 14%. So, nakuha natin, that is 677,005. No? So, again, that is 4,835,748 times 4%. So, you will get that much. 677,005. Ni-round off na lang to the nearest peso. So, ganun din, itong amount na to, i-deduct lang natin from the 600,000. So, you'll have your amortization of 77,005. So, that 77,005, i-add natin dito para makuha natin yung 4,912,753. So, for the last year, kasi yung objective mo naman sa pag-amortize ay dapat mag-equal yung carrying amount natin sa principal maturity. So that, for the last year, wag mo na lang i-multiply ito ng 14%. So instead, you just get a difference of this two. So the difference of that two is, yan, 87,247. So, 87,247, yun yung amortization. So, i-work back na lang natin. So, para makuha natin yung interest income, so you add amortization plus your interest received of 600,000. So, you have a total of 687,247. So, for example, class, tatanungin kayo, magkano ang carrying amount ng loans natin as of December 31, 2020? So, your answer is 4,835,748. So, what if tinanong kayo, how much is the interest income noong December 31, 2020? So, your answer would be 667,548. So, yung total natin na effective interest. So, ano yung components niyan? Una yung nominal interest sa 600,000 plus your amortization of 67,548. Okay? So, let's proceed to the entries. So, for our entries at the end of 2020, so that's December 31, 2020, this is our entry. So, to record the interest collected, so this is based on the nominal interest rate of 12%. So, you'll have 600,000. And then, this one is to record the amortization of the discount. So, you just debit unearned interest income, 67,548, and then credit interest income. So, again, if you're going to look at the amortization table, again, so you can just refer in the amortization table for your entries. For 2021, ganun din. Una, meron siyang cash na natanggap para sa interest. So, nag-debit siya ng cash, nag-credit siya ng interest income. Another entry for the amortization of the unearned interest income. So, based on the amortization schedule, so yan, 77,005. And then, pagka last year, yung 2022, so still collection, and then amortization. So, based on doon sa table. Tapos, last, yung collection ng principal amount. So, that's a debit to cash and credit to loans receivable. So, presentation-wise, how do we present your loans receivable? So, for example, if that's December 31, 2020, so your loans receivable, of course, is 5 million. Deduct lang natin yung ating unearned interest income, which is 231,800 minus the amortization of 67,548. So, that's 164,252. So, if you're going to deduct that to your 5 million, so your carrying amount is 4,835,748. Okay? So, that's the same amount that we have in our amortization table. To summarize the concepts pertaining to loans receivable, remember this, this will be your summary. So, first, at initial recognition, when the principal amount is greater than the initial measurement, then we have what we call discount. So, here, the transaction cost, your origination fees is greater than your direct origination cost. So, if mas malaki yung origination fees compared to the direct origination cost, the difference of those amount is considered unearned interest income. So, if this is the case, if the origination fees is greater than the direct origination cost, then the effective interest rate is greater than the nominal rate. So, pag mas malaki ang effective rate kaysa sa nominal rate, ibig sabihin, malaki ang interest income na i-report mo as compared sa interest na na-receive mo. So, yung treatment ng amortization to the carrying amount, so every time you amortized, you have to add it because our objective is to bring the balance of your carrying amount equal to the principal amount at the end of the term of the loan. If there is a premium, so this is when the principal amount is less than your initial measurement or present value. So this happens if the origination fees is less than the direct origination cost. So mas marami yung gastos compared sa nakolekta from the borrower na service charges. So kung ganito yung setup, so what you have to recognize is a direct origination cost. So pag meron tayong direct origination cost, take note that the effective rate is less than the nominal rate. So, kung mas maliit ang effective rate compared sa nominal rate, of course, yung interest income niya ay mas maliit compared to the interest received. And every time you amortize, since mas malaki yung amount ng initial measurement compared sa principal amount, so every time you amortize, you have to deduct it from the carrying amount. Para again, the objective is yung balance, yung carrying amount natin per record at the end of the maturity of the loan will tally to the principal maturity. So that's it for the measurement of your loans receivable. So let's proceed now to impairment. So impairment of loan. So when all or portion of the loan receivable are considered uncollectible, a credit loss may arise. So credit losses at the present value of all cash shortfalls. So we consider this as our probable losses. So expected credit losses are an estimate of credit losses over the life of the loan receivable. So according to PFRS 9, an entity shall recognize a loss allowance representing the expected credit loss of the financial asset measured at amortized cost. So there's really a need for us to recognize loss allowance related to the expected credit loss of a financial asset. Now, how do we measure impairment? So these are the factors to be considered in measuring the expected credit losses. So first, the probability or the weighted outcome. So the estimate should reflect the possibility that a credit loss occurs and the possibility that no credit loss occurs. So for example, if there is a 70% chance that no credit loss occurs, then there is a 30% chance that a credit loss will occur. So in short, it should tally to 100 na yung percentages or yung probabilities. Of course, dapat magtali siya to 100. So another thing to consider is the time value of money. So the expected credit loss should be discounted since it will still take time and it's more than 12 months before pa masettle ang loans receivable. And then lastly, it must be reasonable and supported with information that is available without undue cost or effort. So these are the factors that we have to consider in measuring the expected credit losses. Okay. So how do we measure the impairment? So the amount of impairment loss can be measured as a difference between the carrying amount and the present value of the future cash flows discounted at the original effective rate. The impairment loss will be recognized as an expense. So we have here impairment loss is just a difference between the principal carrying amount, the carrying amount of the loan, that's principal plus accrued interest, minus the present value of the estimated future cash flows of the restructured loan using the old effective rate. So pag mas malaki itong carrying amount natin as compared to the present value of the estimated future cash flows, Then we have impairment. Otherwise, wala tayong impairment. Pagbaliktad. Kung mas maliit ito, or meaning if this is greater than this, then wala tayong impairment loss. An impairment loss account is or has parallel account, which is the allowance for loan impairment. So this allowance account is a contra asset that is shown as a deduction to the loan account. Loan allowance for loan impairment or allowance for loan impairment is computed as follows. So you have that's impairment loss minus your accrued interest. That's your allowance for impairment. Okay, so we'll have this illustration. So para mas mapadali yung computations for this problem, I transferred here in the Excel file. So we have Universe Bank loaned 5 million to Bank Card Company on January 1, 2018. The term of the loan requires principal payment of 1 million each year for 5 years plus interest at 10%. So the first principal and interest payment is due on December 31, 2018. Bank Card Company made the required payments on December 31, 2018 and December 31, 2019. However, during 2020, Bank Card Company began to experience financial difficulties and was unable to make the required principal and interest payment on December 31, 2020. On December 31, 2020, Universe Bank assessed the collectability of the loan and has determined that the remaining principal payments will be collected, but the collection of the interest is unlikely. The receivable has a carrying amount of 3,300,000, including the accrued interest of 300,000 on December 31, 2020. Universe Bank projected the cash flows from the loan on December 31, 2020 as follows. So you have here, ito yung projected na cash flows na kung paano makukolekta ni Universe Bank ang kanyang loan receivable from bank card. So you have 1 year after, magbabayad ng 500,000 si bank card. Then by 2022, you'll have 1 million and another 1.5 million by 2023. Now, what is our concern here? So the first thing that we have to do before we can compute our impairment loss, the first thing that we have to do is to compute first the present value of your loans, based on the cash flows as estimated. So in this case, kumpitan natin or kunin natin ang present value ng mga cash flows na to using the effective rate, which is effective rate here is 10%. So, paano natin i-compute yung present value ng mga cash flows na to? So, here, nag-compute lang siya ng present value of 1 factors para pang-multiply natin doon sa mga expected cash flows natin, matatanggap natin 1 year after, 2 years after, and 3 years after. So, these factors here, for example, 0.1991 is computed as 1 plus I. So, in this case, that's 10%. So, that's 0.10 raised to the power of negative 1. So, the factor is that, no? So, 0.1991. So, for that period 1, so dito yan siya. ito na period, that's period 1. So, ito yung factor niya. So, for period 1, ang matatanggap ay 500,000. So, multiply siya ng factor na 0.9091. For period 2 naman, using the same formula except that this time, period 2 na tayo. So, for the period 2, so you'll have 0.8264 or yan. So, that is for the period 2. So, that there is the factor to be multiplied to 1 million since it will be received 2 years after. And then lastly, for period 3, so that is for period 3, so 0.7513. So 0.7513. So that's for the 1.5 million since it will be collected 3 years after. So after that, you simply add all of the present value of the projected cash flows. So yung 2,409,900, that is now the present value of your future cash flows. So, that amount, i-compare natin sa ating carrying amount ng loans. So, yung carrying amount ng loans, that is composed of the principal plus your accrued interest. So, in this case, that's 3,330,000. So, the present value of the future cash flows is 2,407,900. So, therefore, the impairment loss is 892,100. So, to compute for the allowance for loan impairment, so we have here impairment loss of 892,100 as we have computed. I-deduct natin yung accrued interest na hindi na makakolekta. So, you have 300,000. So, your allowance for loan impairment is 592,100. To record our loan impairment loss on December 31, 2020. So, we debit loan impairment loss for 892,100. Credit our accrued interest receivable since it's no longer collectible, 300,000. And credit allowance for loan impairment at 592,100. So, when we are going to present this in our statement of financial position on December 31, 2020, so this will be our presentation. So, yung loans receivable natin, ang principal amount ay 3 million na lang. Then, i-deduct natin yung allowance for loan impairment na 592,100. So, that's a total of 2,407,900, which is equivalent, of course, to the carrying amount of your loans receivable as of December 31, 2020. And actually, that's also the amount now of the present value of your future cash flows. So, let us proceed to the succeeding na mga computations pertaining to this impairment loss. So, what we have here is an amortization schedule for the allowance for loan impairment. So, we have here the carrying amount of your loan receivable as of December. So, what we have to do is to multiply this 2,407,900 by the effective rate that we used in computing for the present value of the future cash flows. And in this case, that was 10%. So, 2,407,900 times 10%, so you'll have 240,790. So, ang mangyayari, itong 240,790, ito yung i-report natin as interest income for 2021. Okay, so since nagbayad ang ating client ng 500,000 noong December 31, 2020, or you're expecting the client to pay that much na 500,000. So what will happen in our amortization schedule is that etong 2,407,900 na to, i-reduce siya by the principal collection. Tapos, madadagdagan siya with this amortization of the allowance, no? Of which we considered as interest income for this particular period. So, that's 2,407,900 minus 500,000 plus 2 million plus 240,790. So, you'll have 2,148,690. So, the same will be applied here. So, if you have this amount na, you'll be multiplying this by 10%. And then, after that, no, this is already given. So, ito yung amount na babayaran ni client by 2022. So, what will happen is this amount here, 2,148,690, i-reduce natin siya by 1 million. So, minus 1 million plus 214,869. So, you will get 1,363,559. So, at the end of this year, 2023, so dapat ma-zero out na yung carrying amount natin kasi na fully paid na ni client. So, what you're going to do here is kunin na lang natin yung difference ng 1.5 million tsaka yung 1,363,559 kasi yun na yung i-consider natin as interest income para ma-close na yung ating loans receivable. So, yan, no? 1,363,559 minus 1.5 plus 136,441. So, for the journal entries, ganito yung entries natin. No? So, first entry natin para sa collection noong 2021. So, you just debit cash, credit loans receivable. And then, for the amortization, we debit allowance for loan impairment at 270,790 and credit interest income of 240,790. So, the same lang din sa December 31, 2022. So, una yung nakolekta mong 1 million. And then, the second one is your amortization sa loan impairment. So, you recognize it as interest income. And then, for the last year, so, same lang din. Nakakolekta tayo ng 1.5 million. And then, nag-amortize tayo ng loan impairment amounting to 126,441. So, as of this day, so, na-close na yung ating loans receivable. So, that's it for this problem. So, again, ang case na to ay parang, naging non-interest bearing na yung loans receivable kasi hindi na maka-afford si client na magbayad ng interest. So, but, again, hindi naman porket walang in-apply na interest, ay wala na talagang interest, no? So that there's a need for us to amortize our allowance for impairment so that a portion of it will be considered as interest income. So, let us proceed now to the second problem for the impairment. So, this next problem is about Urban Bank. So, ito naman siya, nakakabayad siya ng interest kaso lang na-delay. So, merong mga years na hindi siya nakapagbayad agad. So we have here Urban Bank granted a loan of 3 million to a borrower on January 1, 2020. So the terms of the loan were payment in full on December 31, 2025 plus annual interest payment at 8% every December 31, 2020. The first payment was made on December 31, 2020. So on December 31, 2020, due to financial difficulties, the borrower informed Urban Bank that it is probable or that it is probably would miss the interest payment for the next 2 years. So after that, the borrower expects to resume an annual interest payment, but the principal will be paid on December 31, 2026, or 1 year late with interest paid for additional year. So these are the schedule of payments from the borrower. So magbabayad siya after 2 years pa, no? So by the end of the third year na. Tapos yung yung principal payment ma-delay din siya ng pagbayad. Okay? So we are given here the effective or the present value factors or the present value of factors at the original effective rate of 8%. So we have here the computations. So for your December 31, 2023, ang ginamit natin na factor ay period 3. So bakit period 3? Because looking at this timeline, no? So dito natin nalaman na hindi makakabayad si customer or si borrower for the next 2 years. So since our first payment will be in 2023, so sa 2023 na, so that will be 3 years after. So 1, 2, and 3. So that's why the factor that we use is the present value of 1 at 3 periods, 0.795 or 0.794. So the same also for 2024 kasi this 240,000 here will be collected na after 4 years. So dito na period na to. The same also with 2025. So dito na siya makakolekta. So that's already 5 years after. And then lastly, yung sa period 6, yung sa principal na talaga na payment. So you have, or plus interest, so you have 0.7513 yung factor niya. So, pag i-multiply yung factor with the amount of the projected cash flows, so you will get these amounts here. So you simply add them. So this is the present value of our loans receivable. So what you have to do is to compute for the impairment loss. So for us to compute for the impairment loss, of course, we compare the carrying amount of the loan and the present value of the future cash flows. So we have here, the carrying amount is 3 million since there's no accrued interest kasi nabayaran man niya noong 2018. So nakabayad man siya nung 2018 tsaka 2019. Nakabayad siya noon. Nakabayad siya noong December 31, 2020. So, walang accrued interest. So, 3 million lang talaga yung loans receivable. Tapos, after that, no, compare natin yung impairment loss with accrued interest. So, again, this time, wala tayong accrued interest. So, yung allowance for impairment mo ay 428,400 talaga. So, this will be your entries. So, you debit loan impairment loss at 428,400 and a credit to allowance for loan impairment amounting to 428,400. So, presentation-wise, ganito yung pag-present natin sa December 31, 2020. So, your loans receivable is 3 million. Reduce that by 428,400. So, your carrying amount is 2,571,600. Okay, next is the subsequent na entries. So, this is an amortization also of your allowance. So, we have here, for the 2 years na wala tayong interest kasi hindi nakapagbayad si client, dapat mag-compute tayo ng interest using this amortization. So, we have this amortization schedule here. So, you'll start with the carrying amount of 2,571,600. So, you simply multiply this by 8% because that's the effective rate na old no na ginamit pang discount. So, 8%. So, that's 205,728. So, that is your amortization. So, next is this amount here, i-add natin doon sa ating carrying amount na previous. So, you'll have 2,777,328. Then, after that, of course, kinumpute na lang kung magkano yung kulang. So, that's 3 million minus 2,777,328. So, ang difference ng dalawa ay 222,672. So, this amount here is considered as our income in 2022. So, we have here the entries to record the amortization of your allowance. So, you debit allowance for loan impairment at 205,728 and credit interest income for the same amount. Pagka 2022, ito naman yung record natin. So, debit ka pa rin ng allowance for loan impairment and credit ka ng interest income. By 2023, nakakolekta ng interest. So, debit cash, credit interest income. As well as in 2024 and in 2025. So, sa 2026, nakolekta na niya ang principal amount plus the interest of 240,000. Okay, so that will be the end of the second problem for impairment. Thank you for watching this video and I hope you learned something. I'll see you in the next discussion video class. Bye!